Hi, this is Mark with your analysis for the week commencing the 21st of April. Before we get into this week's analysis, just want to cover the subject of gold and silver. I actually started dabbling in gold and silver back in 2003 when my mentor at the time almost forced me to buy when it was about $400 an ounce. And it went absolutely nowhere for about a year. We peaked around 420 odd, then it pulled back to 350. And really, it went on until we finally started to see some movement in 2005. Now, from 2005 onwards, we can start to see some action, and price actually peaked at $700 and odd an ounce. I was very tempted to sell at the time, but the gentleman, whose group I was in, said, no, don't do it. And a few weeks later, I was cursing him because we were back down at 530. It is a rocky road. But what George had said to me was, from all his calculations and from what he could see was going on in the currency world, he felt confident that gold was going to hit $1,000 an ounce. We all thought he was mad. However, eventually in 2008, we got up there. We broke the barrier, and I did sell a big chunk of it. And thankfully I did, because we got a big pullback, all the way 30% pullback down to 680. Since then, we've been very fortunate. If you were buying in this market, you've been able to buy on pullbacks all the way up until 2012. We then had a break of a major trend line. Now, technically, this was the point at which you start to think that gold could be on for a pullback or a break and a drop back down. It meandered for 3 months, finally went up. It got up to about 1800. Now, last week, as you know, the last few weeks, we've finally broken 1527, which is a major line in the sand. And a lot of people will have started to panic. But historically, I have learned to stay in. I actually tend to buy when things are going down, and I particularly buy a lot more silver than gold, as is explained in the article. So what do you do? I don't trade Forex with it because it's just too volatile, and this last few weeks have certainly been a case of that. I did buy more at 26 the other week, and I bought more at 23. And at the minute, on paper, I am out of pocket. What are we going to do now? Well, it could pull back. It could go all the way 15, wherever. But long term, because of the state of currencies, because of the fact that nothing is backed by gold or silver anymore, it's all paper money, I believe that gold and silver are the long-term investments. And I confidently believe that we will get back up to $2,000 an ounce plus for gold, and I expect silver at some point in the not too distant future to hit $100. Now, this is not investment advice, and it is not something that is going to happen overnight. I have been thinking this way for the last few years, that we were going to get back up to $100 an ounce for silver, and it's not done it yet. These are not overnight moves, and as you saw earlier, we had years where price was stagnating and going sideways. But my preferred investment is precious metals, because of the fact that all this paper money that's being printed is going down. The Cypriot situation of the week should have scared the pants off everybody, because one of the politicians in the Eurozone actually came out and said this could set a precedent, and we know it did, because it was the IMF and the EU who told the Cypriot banks to steal their clients' money. So that is why I do it, and that is my continued strategy. And I have posted an article about gold and silver in my blog, and also linked to some old forum posts as well. Now, last week I said to you, be careful with gold. If gold falls off a cliff, it is likely to drag the Aussie dollar down with it as well. Now, those of us who were fortunate enough to short at 105.70 yet again a couple of weeks ago, we are now about 290, 300 pips in profit from a move off this weekly chart. Now, the next possible trade on this Aussie dollar, if we get a move back up, then I'll obviously short again here, because it's worked 10 out of 11 times going back 9 months. This area here, a few months ago, price came down and started to bounce along this area. And what I said at the time, unless price closed below 101.80, do not short this pair. And I would be the same again. Now, what does make me a little wary here is the Bollinger Band is opening, which is kind of saying to price, well, here you go, boys, you can go on for a drop. But I will trade this only off daily charts, and I will only short this pair if we break and close below that 101.80. So you need price to come down, close below on a daily chart, pull back, and then a view to a short. Until that time, I'm only interested to long, because it's happened so many times before, and therefore probability says it probably will again. But watch gold carefully. If gold continues to stall and perhaps turn back up again, then we could get the old fingers in the fire here. Price comes down, touches 10200 and back up again. And if it does, then I will be watching and waiting again here, and especially here for potential shorts on this pair again. Same pair here on the daily chart. And last week, as I say, this was, as it turned out, we looked for this from 3-4 weeks before, and that was the entry I was looking for. And as I say, we're now 300 pips in profit. So if you missed it, what do you do? Well, we got this huge candle last week. Logic says after a huge move like this, you get a pullback, which we did. 103.80 and an EMA were relevant here. Then we got the break and close below 103.40. So again, if you're trading off daily charts, you're not getting your fingers burnt here. And what's happened? Price has yet again pulled back up to the area after a break and has then continued the move back down. If you get a pullback again on this pair, I will short, and I will short at 103.50, and this EMA will be rolling over. So anywhere in this area is my area for a short. These EMAs are rolling over. When these cross over the 200, it gives me a bit more confidence as well that everything is looking down for the Aussie dollar for at least the short term, and therefore at the moment I am only interested to short, except, as I've just shown you, if we get a bounce back up anywhere around 1.0200. And as for the bounces, I go down to a 4-hour chart and start looking for clues. You can of course just simply wait for daily candle closes if you prefer, but going down to a 4-hour chart often can give us more opportunities. For example, here, previous bounce back down, we had a candle failed to break, we had an indecision candle, another indecision candle, a good clue that price was going to go back up. This candle here on a 4-hour, you wouldn't have long because it's broken and closed. When we came back through again, what happens? Price broke and closed above, pulled back to the line and moved away again. So you look for candlestick formations, you look at what the Bollinger Bands are doing, you look at what EMAs are doing, you watch gold, and you even watch the euro, because often the Aussie dollar and euro go in the same direction at the same time. On the subject of the euro, I said to you last week that I preferred the Swissy. It was very messy. This is a monthly chart. Candle's not valid until the end of the month. On a weekly chart, you can see price had broken back up through 130 as I suggested the other week, but I'd left this alone. Again, what I would be interested with this pair is if price breaks and closes above 133, then I will be interested for a short back down on this pair. But other than that, it's very messy still. What was apparent last week, we had this huge candle move down here. Now this candle here I think was about 200 pips, and it was after news related. So if you get a huge drop like this, you then start to look for where is it going to stop. And clearly the logical area on this pair was 130. So if you're trading intraday and you're looking on 4-hour charts again, then it's possible. I mean, it is a dangerous strategy, but when price has already done 200 pips in a day and it's coming up to a hugely significant area like that, then it is an area of interest for potential trades. This is too messy for me at the moment. As I said earlier, I need a pullback. I'd like a pullback up to 133, please, with a view for a short. Your difficulty here is you're needing breaks and closes. You need a break and close below 130 to short, then a pullback. The problem then is 129.00 was very big and important, and you're looking in terms of needing your stop really above the EMAs. The risk-reward ratio is not great. Further option, of course, 130 being key, is look on 4-hour charts once again for a clue for a potential bounce back up. But it is messy, it is a bit all over the place. There's big Italian news at the weekend, there's been an IMF meeting as well at the weekend. It's all a bit too choppy for me. I said to you last week I preferred the Swissy. Now with the Swissy last week, after the previous week's market close down here, I was saying to you that I wanted to pull back all the way back up to 93.25, and we actually got it on Monday, and Monday, Tuesday, we got the 100 pips out of this move. Now it then came back up later in the week, and I had a few people emailing me saying, would you still do it again? I preferred to take them the first time, and as the week progressed, and then we were banging against this 200 EMA, I certainly wanted to take it on Friday. I'm more interested to short the pair, and the thing is now, if it's going to pull back, where's it going to pull back to? Well, 9400. If I'm trading intraday, I will have a look around 9400. My preferred area to short is all the way back to 95. So if the euro drops The Swissy should go up because 90% of the time it goes in the opposite direction. I would be interested to short all the way back up at 9,500. British pound, I was explaining last week, I would have only longed. I said do not long unless it clearly breaks and closes above 15400, and hopefully that kept you out of potential losers here. And what I was saying is it was very choppy and it was rangy. And then Wednesday morning when price was up here, I explained that I felt that the pound was going to drop, and I also explained that there was big news out, and what happened, the news came out and bang, it dropped and it stopped again on this area. We're still in a bit of a range here. I am interested to short this pair. There's more negative news at the weekend. Another one of the rating agencies have dropped the British pound's value down. I would be interested to short again if we get the pullback to this EMA 53.30 area. This has been major importance before. I will be interested to short there. Euro pound. Now, Euro pound on Wednesday I showed you how price had come up, touched to the pip, the 8600 I was looking for, and I explained about moving stops to entry to protect your trade and to take some profit off. Then what happened? The news came out, bad for the pound, good for the euro then, and suddenly bang, it would have taken you out. So had you not moved your stop, as I was explaining, you would have turned from being in a winning position to a losing position because of the news. And therefore what I tend to do is with the euro pound, 15-18 pips of movement, because the range is small, I move my stop to entry and either take half off or just leave all of it to run. On the other pairs with a bigger range, 100 pips and more, then I will go for 20 to 25 pips. Now for the week ahead, what do we look for with this one? Well, it's an indecision candle last week, but 5-8 cross forming, stochastics forming. I am interested to short the euro pound at 8700 on an intraday. Look again at 8600, and again this is the scenario. You're looking for candlesticks. So the candlestick pattern comes up, and if it touches and you get a reversal candle, then I will be interested to trade it. But for a forward order, I'm far more interested to short. It's 8700. And the other thing to be considering here, we've bounced along in this range now. This is a bit like a summer range, and this has now been going on since the beginning of April. We had an area of resistance became support, and it has held all the way along. So the other option is a potential long back up at 8500. So short at 87, long at 85. If the euro tanks on the weekend's news, then you look for a clear break and close, and I would look for a close below this candle low. So I would look for a closed candle below 84.90 for a pullback, and then a view for a short. The yens, now very messy, but of the yen pairs last week, we did get the pullback, but they spiked again. Very prone to news at the moment, and there is some big Japanese news out this week, so you need to be careful. Two options with this one. I prefer the dollar yen out of all of them. Potential pullback again to 96.50, or you look for a break and close above 100. And the IMF slapped the wrist of the Japanese at the weekend, but very mildly, so it's almost a case of giving permission that they're going to carry on. So a break and close above 100 followed by a pullback, I would definitely be interested. And if you look, if the Bollinger Band stays open on the weekly, that will give me some more confidence. The others, the Aussie dollar yen, very messy last week. It came down to 100 last week, but a nasty spike would have taken you out, and then it's turned back up again. Your difficulty really is in a bit of no man's land. I would look on a 4-hour chart. I would not place a forward order on this, but if you get a pullback again down to 100, then look for clues on a 4-hour chart for potential bounce back up. I am only interested to long this pair, and the problem is here, it's a bit of a way away from its current double top, and there's no real clue for me for an entry, so I need a pullback. Similarly, the euro yen pulled back to 127, but it went through. And again, this is why I always tell you, only take one yen trade at a time, because had you taken all three, you would have trebled your losses. And again, similar scenario to the Aussie dollar yen, we're coming up to a double top, which also happens to be a monthly 200 EMA, so there's a lot of resistance here. So the options, you look for a pullback to 127 with a bounce back up, or you wait for price to close above this 200 EMA, and I would do this on a daily. Anything less I wouldn't do because it might be choppy again. So on a daily chart, I will look for a break and close of the 200 EMA with a view to a further long. Finally, the dear old CAD. It's going all over the place, very messy at the best of times. It's erratic, and I just don't honestly know at the moment. And the secret of Forex trading is, if you don't know, admit it and walk away. What I am still looking for, if price pulls all the way back down to this moving average, which is now around 10040, then I will long this pair. But the last few weeks we have simply been bouncing along, and it's not even clear lines, it's all over the place. The same pair on the daily. It's attempted to break this weekly 200 on 3 occasions last week and failed. The price is simply hanging around, and we've had some really tiny ranges on this pair lately as well. So it's one of those pairs I trade some of the time. I prefer the euro, the pound and euro pound most of the time, and that Aussie dollar are my main pairs nowadays. I only trade the CAD when it is behaving itself, and that is certainly not the case at the moment. A bit vague today, I'm afraid. I'm going to wait for the market to open, London to open, and see what the reaction was to the IMF meetings and the G20 meetings from last week. I will be having a peek at market open just in case we get any gaps as well. Okay, have a good week.